接下来，我们邀请下一组专家为我们分享。他们要分享的主题是稳定币的未来发展。Next, let's shift our focus to another topic. What's the next for stablecoins? May we invite Mr. Gary Liu, co-founder of CEO at Terminal 3, Ms. Jeannie Lim, head of APAC at Paxos, Mr. John Cahill, COO Asia at Galaxy, Mr. Abel, head of APAC at BitGo, and Mr. Sergio Mello, head of stablecoins of Anchorage Digital. 掌声有请我们5位嘉宾，谢谢。
All right. Good afternoon, everyone. It's good to be on stage. Thank you, RD, for organizing this and inviting all of us to come join the conversation about stablecoins. I think there is a main stage panel with pretty much exactly the same title as ours, wrapping up right now with RD CEO Rita Liu on it, along with our friends Dominic from Standard Chartered, as well as Yam Ki Chan from Circle. But I'm going to guess that this conversation is going to be more entertaining than that one, so you guys picked the right one to sit down on. Here's how we're going to start. We are going to start with a very, very quick 15-second introduction per person on the stage to explain to you who we are and what our stake is when it comes to the stablecoin ecosystem. I'm going to start with Jeannie to my left, and then we'll go from Jeannie all the way to Sergio and then back. Jeannie, go ahead.
Hey, good afternoon, everyone. Thank you, Gary. So my name is Jeannie. I'm based in Singapore, and I head up Paxos APAC. And who is Paxos? We are the issuer and the blockchain infrastructure provider for USDG, or in some cases, you heard of PYUSD, USDL, USDP. So we are basically in the stablecoin infrastructure business for a long time. Looking forward to the discussion today.
Brilliant. Thank you. John.
Hi, I'm John Cahill from Galaxy Digital. I run Asia effectively as the COO for the region. And we are user, investor, sometimes issuer with our All Unity project on the Euro stable, and general supporter of payments and infrastructure across the board in crypto.
It would be easier to ask you what you guys don't do.
Very, very few things when it comes to crypto.
Abel.
Hi, I work at BitGo. BitGo is one of the largest infrastructure companies in crypto. So everything across custody, wallets, staking, trading, lending, borrowing. We have our own stablecoin as well. That's our stake in the game. But yeah, very excited to be here. Thank you.
Excellent. And Sergio?
Hi, I'm Sergio. I work at Anchorage Digital, which is a platform for institutions that need to get into digital assets without getting burnt. We have a bank in the US that is the first and only federally licensed bank, specifically for crypto, and also a Singaporean payment institution, and I am the head of stablecoins.
That's your stake. And I'm Gary. I'm the co-founder and CEO of Terminal 3. We are also an infrastructure company building in data privacy and security. With regards to stablecoin, we provide zero-knowledge cryptographic identity and credentials that help sew together the traditional finance world with the digital asset world. Regulated stablecoins are one of those assets that we serve. So we have a lot of infrastructure on this stage, and I actually think that it's the right kind of conversation to be had right now about what comes next with stablecoins. Because at the end of the day, stablecoin as an asset is going to serve let's call them sinew needs, connective needs between financial ecosystems, but it's really about the rails. At the end of the day, if the rails are not mature, stablecoins are not real. So we're going to talk a lot about that, but we are going to jump right into controversy. Actually, maybe it's not controversy. Over the course of the last several days, there's been a lot of news out of the United States. So we're going to start with that. Two major pieces of news. The SEC in the United States finally made public their guidance on stablecoins, effectively saying that the vast majority of stablecoins are not securities. Okay, that is very, very important distinction that they finally made. And the second piece of news is that the Stable Act, S-T-A-B-L-E, has made progress in both houses of Congress and is likely going to move towards congressional vote relatively soon, which means that a regulated stablecoin regime is coming to the United States. My first question for this panel, rapid fire first, so just a one-word answer. Is this good, bad, or neutral for the global industry? Jeannie, we'll start with you.
Neutral.
Neutral. John.
Good.
Abel.
Good.
And Sergio.
Good.
All right. Jeannie, you're going to be last, okay, on why it is just neutral and not good. Sergio, I'm going to go to you first. Anchorage, of course, really important in the United States ecosystem. Only, I believe, still actually chartered digital asset bank in the U.S.
Yeah.
So why do you say that all of these advancements of policy and regulation in the U.S. is definitely good for the global ecosystem?
It's good because the global ecosystem for trade and finance still is deeply anchored on the US dollar. So a faster, better US dollar on chain can only benefit the rest of the globe. As simple as that. And for how slow we've moved in 4 years of non-regulation, this step function increase in speed in Washington, D.C. is very well perceived by the markets. Don't look at the stock markets today. I mean, the other markets.
Well, even if we look at the token markets, it's still unsure of what people actually think about this. But I get your point. John, I'm going to come to you too, because again, a US-centric in many ways firm. And by the way, you said that you're effectively COO. You are COO, effectively CEO. That's the way I look at it.
Effectively.
Here in Asia, what are your thoughts about the coming regulations for stablecoins?
I mean, I spent 20 years in traditional finance, and I've worked in regulated businesses for most of my adult life. And I've been of the opinion, and continue to be of the opinion, that the only way to real broad adoption with any of the things that we do is through a regulated channel. And I think the U.S. getting on board with regulation gives cover for global markets to follow and to iterate on what they've done. And so I think the world in a lot of ways has been looking to the U.S. because of U.S. dollar prevalence to lead the way. And we've kind of been stuck in the mud, and I think these things are foundational for building on everything that you put on top of it.
Abel, I'm going to come to you. BitGo operations globally. We still see BitGo as kind of, Asians own in many ways. You have major operations in this part of the world. Here's the controversial question I want to ask you. USD primacy is status quo. But a lot of people in the digital assets industry do not believe that is necessarily good for the future of the world. There are plenty of governments around the world looking for alternatives, not only to the US dollar as reserve currency, especially with the state of American politics today, but also looking at digital assets and digital asset settlement as an alternative for things like SWIFT. So why, in that case, based on what John's saying, why is a regulated US dollar stablecoin regime still, in your mind, good for the world?
Yeah, I mean, I'll answer the first part of the question first, right? I don't think there's been any alternative since everyone's tried to get off the petrodollar. There's just no alternative, and no one has come close to coming out with a good alternative. Stablecoins serve a very good practical use case, and therefore dollar-backed stablecoins have found their use case in the world today. You could actually argue that a regulatory clarity around a dollar-backed stablecoin helps reinforce dollar hegemony as well. Because as what Sergio said, a lot of the world's financial capital and institutions are based on the US and from the US. A lot of people still look to the US for that direction, right? And therefore the US coming out with some sort of clarity, we may not agree with it fully, is still a good thing for all of us going forward. Right? And again, it's obviously starting from a very low base based on the hostility that we've faced over the last 3-4 years now. So some clarity is good. I think it paves the way for us to move forward, and it helps reinforce dollar hegemony, which I think for the time being is what serves a very good use case for the world.
I would agree with that. I think you look where stablecoin adoption has picked up the most inertia, over the last, call it 10 years, and it's in regimes that aren't dollar-based, with a population that is underserved, underbanked, and that is trying to maintain value for their labor and their earning. And so this is just an easier mechanism to do that, and I do think it does reinforce the dollar's prominence in markets.
In fact, a lot of the use cases, and a big reason why BitGo also decided to launch our own stablecoin, I'm sure very similar to USDG as well, is that because we see a lot of these corridors around the world, right? Whether it's Colombia to the US to South Korea, the US to Vietnam, the US to the Philippines, we see a lot of these corridors within our own ecosystem and our own client base today. So having our own stablecoin to help facilitate these transactions between our clients within our own regulated ecosystem just seems to make sense, right?
Jeannie, I'm glad
Yes.
we're finally getting to you. You said neutral.
I'm neutral, yes.
Do tell us why.
Sure. So USDG, after all, even though I work for the American company, USDG is an MAS regulated stablecoin. MAS being in Singapore and me representing Singapore, I have to be Switzerland in all the regulatory involvement around the world, especially to this year's election year as well. But fundamentally, I believe demand is there. I agree, right? The demand of US dollars is still there and will continue to go there. With the action of stablecoins will actually, I think, would even increase, as we can see. But I don't want it confused with regulation as well, because I think around the world, we will need a global mandate or collaboration of what crypto or stablecoin really is, just like the traditional financial system. It's no different. Now, Singapore is starting. We are trying to get our new framework that will be live soon after elections. I can see Hong Kong, HKMA, trying to do something about it as well. They have an opinion. And then you'll have MICA in Europe talking about regulation about USDG or stablecoins in general. And then now US is following very, very closely behind. So I think a global regime is needed. It's not, I don't think it's just one that speaks for all, is my opinion.
We will definitely come back to regulation and whether or not harmonization of regulation is just a pipe dream in a little bit. But I want to throw another fun question to this panel. Tether. So Tether also in the last couple of days has very publicly announced to say, listen, we're now very seriously considering issuing a new stablecoin that can exist within a regulated regime in the United States. Do you guys actually think that is possible? And if they were to do that, are they actually going to be able to carve back any market share in the regulated markets? John, you made eye contact. So
Yes. Yes, I did. I think in the current regime in the US, all things are possible. I think we're in a little bit of a pay-to-play sort of landscape, and certainly if the ambition of Tether is to participate in a regulated way in the United States, there's a pathway because they have plenty of capital and have probably created the single greatest money-making business, certainly per head count, in the history of time. And so I think that channel is open. It seems to be open to anyone. You know, you can buy a golden visa for $5 million. I think that channel is open for anyone to get in. And, you know, I think the market will figure out what is a good product and a bad product, and certainly they have the resources to kind of see it through.
what about for the two US dollar-backed stablecoin issuers on the panel? What do you guys think?
Well, I don't know the final outcome, but I think there is certainly something over there. After all, Cantor Fitzgerald, which is run by Howard Lutnick, invested in Tether. I don't think Tether will have the confidence to say what it said without the investment. So there must be something over there, but the form, the structure, TBD, I guess.
I think it's going to take a long time because Tether is so far ahead in terms of their volume. And because they have been behaving like an unregulated stablecoin, they are an unregulated stablecoin. If they want to start working with governments like United States, MAS, Middle East, I mean, MICA, I mean, Europe is even more, it's even tougher on regulation and compliance and liquidity. I think that they could, I'll never say no, but I think they will have to like pull back all their transactions. They're going to uncover a bunch of worms, and they were going to be spending a lot of money in the next few years fixing their current infrastructure compliance and regulatory policies.
John, go ahead.
I just want I think incentives matter, and if Team Tether wanted to incentivize their current users to move to a regulated channel, they have mind share and market share, and there are ways to incentivize your users to do that. I think it's harder to build something from scratch, and we've worked with both your teams to varying degrees on helping those efforts. But I think if you have market share captured, it's easier to move that around than it is to generate it from scratch as a competitor.
Okay, a very fair point. All right, we are now going to go back to basics.
How about my answer?
Oh, Sergio, go ahead, please. Drop
you
in.
want to hear it?
Yes, I do want to hear it.
Okay, this is controversial. So, what about the second biggest stablecoin in the world? What is it today? You all know what it is. Circle. Is USDC a regulated stablecoin?
They would claim it is.
Is it?
Well, there's no prudential regulator, right?
We have we have a no here. Is it? Neutral? Is it? No. Okay. So there was no way to get to tens of billions of dollars or hundreds of billions of dollars of size as a stablecoin issuer in the past 10 years with being regulated. So I understand why Tether did what they did. And I also understand that it's important to decouple the Tether token, USDT, from Tether Enterprise, which is now divesting in so many businesses, in investing actually in AI, in electricity for Africa, and so many different things, right? And so one of those businesses could definitely be a financial infrastructure in the USA. I don't see why they shouldn't go and do it. It's absolutely in their freedom, and the US as a system should encourage any businessman that wants to come with $1 billion check to come and open business, regulated business in the US. So that's my view.
I actually don't think that's that controversial at all, Sergio. I'm going to stick with you, and I want to start with you on the basics of the stablecoin business. Okay? There's still a lot of discourse. I mean, just a couple weeks ago, I was leading a closed-door discussion with a lot of capital in the room, tens of billions of dollars of asset managers in the room. And one of the key questions was, why do stablecoins matter? Like, why does it matter? Do we not already have good enough settlement for very, very large quantums of dollars and moving across border? Why on earth do we actually need stablecoins? Now, granted, some of them were speaking only because they were thinking about just the retail use case of stablecoins. And here in Hong Kong, by the way, and we'll get back to Hong Kong later, the retail use case for stablecoins is very limited because every single one of us who lives in Hong Kong has half a dozen digital wallets, and we can pay with an Octopus card pretty much everything, including taxis now, believe it or not. So what is the business case behind stablecoins? I want to start with you because you guys are a full stack banking solution for institutionals.
You gotta be a little romantic to understand stablecoins. Everyone knows the money flower here, right? Give me a nod. Money flower? Exactly. So when you understand what the various petals of the money flower do and understand what's treasury, what's yielding, what's transport and settlement, and you start to fuse those pieces together in a programmatic way, then you can start rebuilding the financial system from the ground up. That's when you understand what stablecoins are for. And that's why I refuse to say, oh, they're only for cross-border or absolutely for this or that. No, they're about re-engineering the system. They're not about a specific use case. And of course, when you re-engineer a system, you can get better use cases. So if you're talking to asset managers, what's important to understand is that they can finally have the same instrument, the same token, the same piece of something that can act as a money market fund, but at the same time as a settlement piece, and you can do some magic in the middle. And this is something that you couldn't do before. It was very expensive and also required a lot of intermediaries. So putting everything on the same level playing field and disintermediating certain parts of the system that today are necessary to obtain the treasury part or obtain the settlement part, but having everything on chain is what really works. It's very much about actually dodging the financial system, as they would say in America, and get rid of the inefficiencies. And I see why some of the intermediaries would not love it. In fact, I really think that banks that rely heavily on fractional reserves, which is part of the economy, and it's a healthy part of the economy, broad money creation, but still have to rethink how that's going to be made and redistribution of the wealth coming from that industry, because it can no longer just be kept in certain corners of the industry. It has to pass through directly to various stakeholders down the line. Maybe all the way to retail, and maybe not. That's another question, but it has to be redistributed differently.
Well, let's stick with institutional. John, I will come to you, both you and Abel. Very specifically, my understanding, do correct me if I'm wrong, both of your organizations provide prime services of some kinds. And stablecoins increasingly is an asset that is being used in the digital asset world for prime. So can we talk more from your points of view on the institutional use case, following up on what Sergio said, for stablecoins and how they create inefficiency in a market that may be still somewhat inefficient? And John, you can insert whatever you wanted to say anyway in there.
Yeah, I mean, from our point of view, we obviously sit at the intersection of a lot of capital flows, right? And to Sergio's point, if we have to sort of go back to the traditional infrastructure and then back into crypto and do this sort of ding-dong, it's just not efficient for our clients. It's not efficient for us. So stablecoins serve as a very standard practical use case in to help facilitate faster settlement, faster transactions. Obviously, the whole talk about cross-border payments and settlement, all that still applies, on top of the fact that our institutional clients are not just crypto-native firms these days, but they are increasingly also corporates that are sophisticated and want to enable and optimize for the settlement and quicker time to transact and send funds around as well.
Can you give a specific example that doesn't breach any kind of confidentiality, but a specific example use case of corporate cross-border settlement that stablecoins make significantly more efficient than traditional rails?
A very interesting use case over here. I mean, there's a ton, right? But we recently helped a client borrow against his Bitcoin in USDT to facilitate a payment for a private jet. Because this client is in a very remote country where it was difficult for him to send fiat out. So if you think about this use case and expand it to not just high net worth individuals, but to corporates around the world, and the possibilities that they can do with this sort of settlement that breaches and sort of dodges the traditional financial industry, that will take weeks upon months for a facilitation like this to be completed, then the possibilities are endless.
Very interesting use case. John, I'll give you an open mic for like a minute or so, and then Jeannie, I got some infrastructure questions to ask you.
So you said that in our pocket we have 6 different applications that can move things fairly instantly. That's kind of an awful user experience, right? I think standardization is the reason why stablecoins matter, and being able to use them not only within the confines of a single bank's application and only to their customers, but moving it, to pay your taxes, or moving value around to do all kinds of different transactions. I travel a lot, and I have this huge adapter I have to bring anywhere because we don't have standardization in many things that seem very obvious. And payments, this is a purely technology-driven thing, and it all lives sort of on the internet. And so it's a great way to create that standardization and streamline and the efficiency that you get with it. I tried to pay my taxes out of my local Hong Kong bank account, and I went to the branch and I waited in line, and I got to the front, and they said, "Oh, we don't do that anymore. We don't facilitate dollar payments to, the U.S. government." And so I actually walked out of the bank. I had to do an online transfer, and I walked into a meeting with a stablecoin issuer, and I was like, "Look, based on my experience from 20 minutes ago, we have to figure this out. We need people to have a better experience, because if I have value that I've worked for and it's in my account and I can't move it to take care of my payment needs, what's a bank even doing?"
Well, that is great. The Stable Act defines stablecoins as a money instrument.
Exactly. Jeannie, it feels like you really want to drop your answer in here too. So please do, and then I'll come back to infrastructure.
Sure. So I want to come from the private jet use case all the way to more of a emerging market use case.
One that I understand more than private jets.
There you go.
Yeah.
Now we're going to hang out more with Abel now that he's got this client. So for me, the reason why I moved back from Chicago to Singapore was to head up a traditional fintech company called WorldPay. And I wanted to understand cross-border payments across Hong Kong to Singapore to Philippines, Vietnam, you name it. So anything that e-commerce touches and all the airline touches, I want to understand why everything takes T plus 2, 3, 4, and it depends on what payment method you're dealing with. It could be T plus 28. And if you go to Latin America, it's even worse, right? If you deal with boleto, I'm not sure if anybody knows here what boleto is. It's a payment method where it takes T plus 28 days to fund the merchant. So if you're Singapore Airlines or Hong Kong Airlines, you probably can afford a T plus 30 or T plus 28. But can you imagine you are a mom and pop seller in the middle of Vietnam, where you actually, whatever you sell today, you don't get paid until 30 days later. But then this is what puts food on the table. So I think there is, to me, the use case of crypto, stablecoins, blockchain infrastructure it's great to serve institutions, but I think the actual use case is to serve these underserved, underbanked economies of the world to do cross-border trade.
Cross-border in particular. Okay. Let's move on to infrastructure a little bit and the future use cases of stablecoin. I think what we've talked about on stage right now still feels like the future because there's a standardization and adoption and regulatory hurdles that still remain. But from a technology standpoint, we all know that the rails are moving significantly faster than those other inhibitions. And there are new ways that digital assets can now be used derivatively in particular that will benefit the world long term. So Jeannie, I want to start with you because Paxos is so deep on the infrastructure side. Can you tell us a little bit more about the next gen use cases of stablecoins because of technological advancement?
Sure. So for Paxos, we work with two different types of verticals. One is a traditional finance or banks. On the other side, we work with crypto native. So my expertise comes more from the Web 2 base, but I see a lot of payment companies, traditional acquirers in Hong Kong, and the big ones, just to name a few. They have asked us for advice for a few things. How do we incorporate payments, traditional payments, to do cross-border trade on the blockchain? So they're looking at blockchain payments. That's the number one use case. Number two, how do we partner with the USDG to transfer dollars to dollars in a faster way over the weekend, over the holidays, right? Because traditional banks don't open in these days. Number three, how do I white label my own stablecoin? I think that is the number one question that everybody is asking me in the traditional, whether you are Amazons of the world or Sony or Shopees of the world, everyone is curious, can I issue my own stablecoins? Until I tell them from a regulatory and compliance perspective how hard it is and how the journey between Paxos and PYUSD, how we help them through this journey, which took 5 years. They took a step back and said, maybe we should partner with you on USDG first, just to see how the traffic flows, what the use cases are, before learning how to white label a stablecoin.
By the way, what's interesting is occurring to me as we continue this conversation is that in this crowd, how many people are visiting Hong Kong from mainland China right now for this conference?
To ask you Mandarin.
Whose Mandarin is better? 是谁是国内的来香港来，就是为了这个大会 ？A few, okay. I think if we were at a main stage, there might be a little bit more. I think what's occurring to me is this: there's a lot of the problems that we're talking about when it comes to settlement, and banks being closed on weekends and all that stuff, and merchants not being paid, small business owners waiting a week to actually get paid for the products they've shipped out. These are not problems that exist in mainland China, have not existed in mainland China for well over a decade. Again, because one of the beauties of development within mainland China has been the fact that standards are set top-down. And the digital payment rails have long now been native to the way that individuals and businesses operate. But the rest of the world is not like that. And so the moment you go cross-border, or actually even in what is supposedly a very, very advanced city like Hong Kong, these things are not standard. I just wanted to make sure that we're not losing at least the folks in the audience who are wondering, why are these even problems? Because day-to-day life just north of the border here, these are not problems.
But it's a closed system.
It is.
It's a very well run but closed system. So if you're talking about cross-border, then it's a whole different ballgame.
For now.
All the four letters of
now.
the break, have very efficient domestic real-time settlement programs all the way to retail. PIX and UPI and
Pay Now, PromptPay.
Also Russia has one. And so it's appalling that in 2025, moving money cross-border is like using your passport and collecting a visa and then having to stamp or reapprove your passport when you got someone else to see it, visually turn the pages and find a visa or a lack thereof at the time of landing. This is more or less how traditional money still moves on SWIFT rails.
Jeannie, go ahead.
I was going to say yes, if you have a credit card or a bank account, that makes a lot of sense. But I think this is where stablecoins make sense in our industry, in our part of the world, because not everybody has access to that instrument or even USD. So I just want to put that out.
Okay, can I ask then, what is the point of CBDCs then?
Go ahead.
I got it.
You go.
Have you tried using a stablecoin when there's no internet and no electricity? So a well-designed CBDC is supposed to be working like cash, also offline on hardware instruments, so that it could be used as a last resort with full resilience baked in. That's the point of a CBDC. And of course, disintermediating the banks in some or another way so that you simplify the system. So it does have a role to exist, and it can be private and can be secure, and it doesn't have to be a panopticon of currency. Of course, in certain countries, it has been designed to be a crowd control system. In others, it has been designed differently, like Canada or others. It's a design choice.
And so, Sergio, you do believe that we have a future in which there are stablecoins and regular coins and CBDCs living alongside of each other?
Absolutely. Just like you have many different type of money instruments today, and they're driven by technology, history, situational opportunity, regulation, and yeah, of course. Probably even multiple CBDCs in the same country to a certain extent.
Abel, I saw you lifting the mic.
No, I was going to ask the exact same question you asked, which is, can CBDCs live alongside stables in the same country, in the same jurisdictions, which
John
Sergio touched on?
I mean, I think the answer is yes. I mean, CBDC doesn't need to be the national currency for it to exist, right? There's a wholesale version that's operated and managed by the central bank, for instance, into the banking system, and it just kind of exists amongst the wholesale participants and not, used every day to pay for coffee and run your life. It's a monetary tool to distribute value to banks and major financial institutions.
Jeannie?
I think the use case for CBDC at the government level is more for...
Here comes the Singaporean.
What? What do you think I was going to say?
No, you're gonna speak on behalf of a government.
No, this is what
Whereas
I heard.
everyone else on stage is trying to speak on behalf of the people. No, I'm kidding.
You know what? I think I've been talking to the regulators for too long. I'm going to start becoming a politician soon. No, but I think this CBDC use case for government, and I feel like the governments around the world is interested, including Singapore, Hong Kong, China, or matter of fact, India, is the ability to track the government programs and how useful it is. So I'll give you an example. We have a lot of food vouchers in Singapore, right? But the government pays out cash to everybody's bank account without understanding if those $500 is being used for food or drugs or alcohol or anything. There's no tracking system. And I believe that with the CBDC use case, because there's so many other government and social programs around the world, this will be a good way for disbursements from a government program perspective so that it can be reimbursed to the right folks appropriately, right down to what they buy at the grocery store.
I love it. Thank you.
That is definitely the Singaporean view.
It is.
Well,
I think you have real questions about privacy that I think are troubling and probably need to be asked at a somewhat existential level, because I think that's a core feature of cash.
Of cash, yeah.
Is privacy is built in. It also makes it an excellent channel for fraud and illicit activity. But I think that's an open question. I think that the global markets and governments haven't quite answered yet.
John, I want to stay on you and go back to something you said earlier. You mentioned that Tether is, at this point, I think, inarguably the best money-making company in the history of enterprise. And I want to talk about the fundamentals of the stablecoin business. And most of us in this room will understand the basics of how to make money from stablecoins. You get your customers to give you money, fiat, and then you issue a fiat derivative that is tokenized on chain that they can then do whatever they want with. But now we're holding on to the fiat, and we can make money off of that money, and that is how Tether has become so incredibly rich. But beyond those fundamentals, what are the other parts of the stablecoin business that we in this room may not fully understand that make Tether so darn profitable and make so many others, including folks on this panel, desire to issue their own stablecoins, including the our host here, RD.
Everyone loves a carry trade, Gary. In the history of finance, if you can make money with other people's money, that's where you want to be. And the construct, it really is just a great carry trade. I think what happens is over time, you have competing products that share the value proposition with its customers in a different way. We have money market funds that are getting tokenized, and we're seeing those become adopted. And so eventually the market will decide, what the right balance is and who should reap the rewards. And I think a lot of different companies will try different things and try to hold on to more value. Tether has held on to the vast majority of value for themselves, but being early and being on the biggest venues that were using stablecoins gave them a distinct advantage that they've only multiplied. And so I think that'll ultimately be up to the market to work out.
Sergio, you raised your microphone, so we're coming straight to you.
Tether is a 1 in a 100-year company, quoting its founder, because at the right time, at the right place, they executed a winning strategy. It cannot be replicated. Trying to redo Tether now is futile. It's impossible.
So we shouldn't just move to Lantau Island, all of us, right now?
And maybe other islands. But the point is that last week we all saw into Circle's finances by means of their publishing their S1 form in the US. And we all understand that the money in stablecoin is not on the issuance layer, but is in distribution. And therefore, a stablecoin issuer that does not have a solid, concerted, alliance-based distribution strategy that can gather momentum and critical mass from the very get-go is done. There's absolutely no way to buy your way into distribution as a sole issuer today. And by the way, that's why 3 of the 5 panelists partner into launching an alliance type stablecoin called Global Dollar. The point is that there's no new thing. There's no new Tether. There's only another way to do it, and we have to discover how to do it.
Do you have any suggestions?
Yes.
Rita's standing right there. She's all ears. Immediately shut my microphone off the moment I mention you, just so you know that.
I'll extend an offer tonight to join the Global Dollar. The point is that the money in stablecoin, to answer your question, is in distribution and is in compressing the layers of the stack that stay above and below the stablecoin settlement. And where are we here? At PayFi, right? It's payments. It's everything that can be bonded and bundled together with the settlement in a way that no longer needs a traditional financial institution. So you disintermediate the legacy, draggy, inefficient part of the system. You replace it with more efficient pieces, and you create the space for new BIPs to come out of nowhere.
Just
Jeannie,
wanted to add.
yeah, please.
You forgot one major piece, Sergio.
I did. I'll let it to you.
So the reason why the 3 of us here are partners is because we believe that the economics of stablecoins revenues should be overturned. So as the issuer of USDG, we are giving out majority of our stablecoin revenues to our lovely partners right here. So that is the major difference between us and everyone else. And you get regulated. It's compliant by Singapore.
And like I think being regulated and compliant gives more certainty, more comfort that what's being represented as a dollar is a dollar and is also liquid and accessible in a timely manner, which may not always be the case in unregulated businesses of any kind.
Okay, so if we go down what I think is a logical path, and we get to regulatory harmonization of some kind, at least in major capital markets, we get to standardization, so these stable coins we can use across most payment rails to purchase most products and services. And we get wallets that hold all of them, and they're cross-border, but also cross-chain transaction, all that. we stop being able to necessarily differentiate as consumers, as retail, one stablecoin from another, do we end up in a world where we have many different competitive stablecoins and we're just squeezing margins for this business? Or is there going to be consolidation and we're going to end up with just a few? Abel, you look in shock, so that's why I'm coming to you first.
I think it's yes to both, right? We'll have to go through a period where, I mean, the market has clearly identified that Tether and Circle have a disproportionate grip on the stablecoin market. Right? The same reason why we launched our own stablecoin is to be able to give back the majority of the interest income to our network partners, period. So the starting point is very similar to USDG and to so many other stablecoins out there that are trying to break that dominance, right, by both Circle and Tether today. So I think a lot of new entrants will come into the space. In fact, I've sort of given up trying to keep track of all the new entrants coming into the space now. There's been so many over the last, call it 5 to 6 months. There will then be a period of consolidation because that splintering of liquidity is not good for the infrastructure providers that need to settle to meet our clients' demands real time. So I think it will be yes to that rush to compete in the space, and then yes, that consolidation that eventually will take place. The market will decide, I think.
Sergio, please tell me you disagree.
No, I can't.
Okay.
It's gonna be ugly because before it gets cleaned up. Yeah, I'll see. We will see a lot of blood in the streets of issuers that decide to either commercial enterprises that want to go in stablecoin, bank and non-bank financial institutions that will decide to issue their own stablecoin and find the hard way that achieving global scale billion-dollar liquidity and distribution and network effect and acceptance it's not something A, you can just buy quickly or cheaply, and two, you can achieve actually. It's hard.
So when you say that there's going to be blood in the street, the thing that I think of is are the retail customers who end up holding the wrong stablecoin. So I want to use that as a segue to regulation just for a few minutes. I don't want to spend too much time on regulation. But just a couple of minutes. Oh, sorry, Jeannie. I know you want to spend a lot of time on regulation. Fine, let's talk about this.
I'm totally kidding right here. I'm not a policymaker, by the way. Traditionally, I'm completely partnerships person in tech, so I just want to make clear. But I do find regulation in stablecoins extremely interesting.
And I think all of us on stage agree. But in this situation, if we all on the stage expect that there may be blood on the streets later during consolidation, what should regulators be aware of in the way that they're dealing with regulation now and the setting of policy to, number one, make stablecoin businesses actually sustainable, which, by the way, is a problem with the regulatory framework that's been laid out here in Hong Kong, and number two, to, try as best as they might to mitigate the bloodletting that eventually hurts the retail. John.
I'm not sure when to answer your question, but I'm going to say a few things. First of all, I think fragmentation, by and large, is bad for the consumer experience. And so if there's 1,000 different stablecoins, if they're all worth what they say they're worth because they're holding reserves that back up what they've issued, no one's really losing. You're losing the upkeep and the running costs, the legal and compliance costs. You're kind of running costs for the business, but your customer is still whole, right? There's not, don't think there's a risk of getting caught in the wrong stable unless platforms decide to not use it anymore. And so you could have a platform or a market, and we'll market make for all of them, that have N number of stable coins. As long as they're doing what they're purporting to do, and that they're accepted on enough channels, there's not a lot of downside for the customer there, apart from if there's fragmentation.
Uh-oh, Jeannie. Yes.
Sorry, John. I think I lost my train of thought, sorry. But now, I think what I'm going to say is, I think too many stablecoins or too many of anything dilutes the market, but it's good for competition, I agree. But in some cases, one of my competitors was depacked a few years ago, and it was because of bank fail. And that happens. So imagine hundreds and thousands of stablecoins starts rolling out in this market. What would the Hong Kong consumer do? Which What should they buy? If they're, I mean, it's already confusing that we have all these different cryptocurrencies and meme coins and AI coins in the marketplace, and I think people are confused. So in terms of stablecoins, I think there'll be a lot to try. And then as the global regulators like OCC, I mean US, Europe, Singapore, Middle East, Hong Kong their framework starts to become clearer, you will see a lot of the competition start dwindling down, because I do feel that the liquidity requirement to become a stablecoin issuer is insane, more than a traditional fintech player like a payments company that can be rolled out any day. So it's a lot more stringent in terms of liquidity.
Is that a good thing or a bad thing?
For now, I think it's a good thing because it promotes consumer confidence. So when I explain to institutions what's the difference between USDG and my competitors, it's a clear answer. I have one-to-one. I can't touch your money. Your money is your money in a tier 1 bank in Singapore. I have to show MAS every single month. It's a monthly audit. It improves customer confidence. It improves government confidence. Then it trickles down to the retail business. And they're like, all right, this is actually safer than putting in a digital bank. Is an example.
Abel.
If I had to offer my unsolicited opinion over here, the point in which the market will decide what is a viable stablecoin and what's not a viable stablecoin will come down to the effectiveness of its distribution. Without the network effects, you can inject all the TVL you want, but if no one's going to use it, that will catch on and people will leave it eventually. The TVL will drain itself. But for those stablecoin issuers that can create the network effects, can distribute well, can sustain that distribution, that's when I think the market will sit up and realize that these are long-term winners, and therefore the adoption will then manifest itself. So I think that's the trigger point.
And I do think that when it comes to regulators, the heart of the question I asked is that they may not understand that distribution point. They think about use case, they ask for use case, and they think about security, but they don't get distribution, which means, in Hong Kong in particular, and by the way, this is feedback that has been given directly to the regulators here, so I have no problem talking about it publicly, is that the way the regulatory framework in Hong Kong and in many other jurisdictions that are exploring this right now are set up means that unless there is money to be made in the retail business, it's not sustainable. And the reality is that there is not a whole lot of money to be made in the retail business right now. All of the use cases we're talking about, besides maybe off-ramping for retail, is really in quantum of institutional use case, cross-border, settlement, whatnot. And that is what I think everyone in the stablecoin business believes is the start. And regulators, I think, are still trying to catch up to understand that. And in lieu of, I think because they are so focused on security of these assets for retail, they have carved out and really put up walls for the actual use cases that make these businesses good. And that's what I do worry about for Hong Kong in particular. But thankfully, the regulators here, their ears are open and they are starting to listen. Jeannie, go ahead.
Agree. And I think same for MAS. I think this is the perfect timing for Paxos to be exploring this USDG with MAS and growing it, because they do come to us for help, for advice. They're not closed up. They're listening to us and like, what do we need to do? Are we open to do X, Y, Z? And we give them consultation that, solution A becomes too expensive. Solution B affects global businesses. Solution C, there's pros and cons to every solution, and they're listening to us, which I'm very glad to be part of.
Sergio.
If I had a recommendation to the regulator, it would be to understand that stablecoins are a different thing, and they should be as separated from reserve banking, from fractional reserve banking as much as possible. Stablecoins are safe because they're not reserve banking. So the possibility to transit some of the reserves temporarily on a demand deposit account on a half-daily basis for a quick redemption is acceptable. But keeping 3.3 billion of USD on a DDA is exactly what stablecoin issuers should not be doing. So the more you separate the two, the fractional reserve banking and stablecoin issuance, the more you protect consumers. My last point is that I would not expect retail to really understand the difference between investment instruments of all sorts in any case. So it's up to the wallets, the fintechs, the neobanks, the applications that they use to access dollar balances or local currency balance to really decide which stablecoin to back those balances with.
John and I would be very happy to take you by the hand and lead you directly to the Hong Kong Monetary Authority offices right after this panel, if you would like. We have only a minute left. I'm going to do another round of quick fire questions, just single question, and we'll start with Sergio all the way back to Jeannie for you guys to answer. If you're thinking 10 years down the road, what excites you the most about the adoption and the use of stablecoins around the world? Sergio.
More money on blockchain than in banks.
More money on blockchain than in banks. My goodness. In 10 years. Excellent. Abel.
Well, if the on-chain metrics continue to keep up, to hold up, and there's more on-chain adoption, my hope is that stablecoin adoption will track that. If we even keep that, the penetration into traditional firms, traditional corporates, Web2 firms will be immense, and I don't think that's priced in today.
John.
Just a plumbing upgrade. I'm kind of here for that.
Jeannie.
I want to see more emerging markets getting access. I want to close the loop of financial inclusion. I want to hear T+0. I don't want to hear about T+2 or 3 anymore for small businesses. That would be my dream.
I love it. If I were to be so bold to add my opinion, it really is about equity. It's the fact that we have billions of people around the world that still remain completely unbanked. Even more that have never participated in the public markets and therefore have not participated in the last 70, 80 years of global economic growth because they literally do not have money. And a lot of them, it's not because they can't earn money, it's that they don't have access to money that is worth anything. And stablecoins fundamentally changes that for all the peoples of the world, and I think that that is the kind of evolution that I would like to see over the course of the next 10 years. Everyone here, can we please give a round of applause for our experts on this panel? And thank you so much for Artie for putting this together again.
Thank you so much to our brilliant panelists for the enriching sharing. Please remain on stage and let's capture a group photo together. In the center. 谢谢各位嘉宾的精彩分享，我们一起合影留念。Thank you so much. Please be seated.